Hi everyone, I'm Patty Lovett-Reid and welcome to my YouTube channel. I'm calling it Take Charge Now. There are so many components and moving parts out there when it comes to our personal financial situation that we simply don't have control over. You can't control what, for example, the Bank of Canada just did in terms of interest rates. They increased the bank rate by 0.5%. It now stands at 3.75%. But I would argue that you can control how you respond to that. But first, maybe a little background. Why did they move? The Bank of Canada felt they needed to move because of persistently high inflation. They moved in all likelihood to help out the Canadian dollar, which has continued to be very low, particularly against the US dollar. There is still excess demand for supplies and goods, and when we have excess demand, prices continue to go higher. We have very low unemployment here in Canada. In fact, there are still widespread labor shortages. So you kind of put all this together, the bank is not done. Inflation stands at 6.9%. As the Bank of Canada continues to raise interest rates, it is doing so in an effort to slow things down. Basically, they don't want us borrowing to go out and spend more money. They don't want us to continue to spend money on prices that are going higher and higher. They want that demand to come down. So back to, how do you control an environment where you feel out of control? I think many households, number one, have already shut down the spending. I receive a number of direct messages via Instagram where, for example, people say, I've stopped buying meat. When you look at food prices year over year, up 11.4%. Households are really struggling, particularly those who have lower income. The government's not going to step in and help out, at least that's what they're saying. And so you need to control what you can control once again. Now, the fact is the holiday season is rapidly approaching. Now is the time to have that conversation with your family. How are you going to do things a little differently? No one wants someone to go into debt over the holiday season simply because there's a gift that's expected. Okay, that's the first point. The other is, when we're in an environment with rising interest rates, now is not the time to borrow money. It just doesn't make sense. So you're shutting down the spending, you're shutting down the borrowing, you're looking at how much money you have coming in, what it is you're spending your money on. If you have an emergency fund, now might be the time to tap into it. Now is also a good time to tap into any loyalty or reward points that you may have, because this just frees up excess cash. Speaking of cash, cash is king, at least from my perspective. What does cash allow you to do? It basically allows you financial flexibility. What I mean by that is, you may have bills that you have to satisfy. You can't shut down all of your expenses if you have a contractual obligation. You have to make that payment. And back to another reason why the Bank of Canada still feels comfortable putting rates higher, our delinquency levels here in Canada remain very low. Canadians are making their bill payments. They're not falling behind. They're not becoming delinquent, which is typically a payment that's due 90 days or more, or shall I say past due 90 days or more. So when you look at households and what they're doing, they're saying this cash is king, that financial flexibility. By having that cash, what it means is you don't have to sell out of a stock position at exactly the wrong time because you have a bill to pay, rent to pay, a mortgage to pay. Now, the knock-on effect I think we need to watch here, which is why we want to hunker down and get through this period, is that it takes a while for higher interest rates to work their way through the system. They will, and when they do, households stop spending, businesses stop spending. We could see the unemployment rate start to tick higher. No one worries about losing a job until it hits their household. If it's their neighbor, well, that's unfortunate. But people look at things from a personal perspective. Mortgage rates are going to go higher. I'm going to talk about that in an entirely separate video, because I think the big debate, variable or fixed, comes down to you and your household and your overall financial situation. But for now, it is safe to say The economy likely in 2023, maybe into 2024, is going to start to slow down. How you get through that will be dependent upon some of the actions you take today, which is why I think today's a great day to launch this, because it's time to take charge now. We've got this step by step.